All right, good morning, good morning. We are back. I got internet again. So excited. It's been a while since we have done a morning briefing. So let's just start with the basics. It's what we do every morning when we start the morning briefing. And for anybody who's new and have not seen a morning briefing before, because it's been probably over a week since I've done one of these, the morning briefing is designed to teach you how to identify opportunities for the day. I'm not trying to give you a fish. I'm trying to teach you how to fish. Maybe that's a subtle difference, but to me, it's an important difference. Start with Market Watch. Go to Calendar. These are the economic events for the day that can reshape our entire trading day. There are days where this list is not very full, and then other days where it's very full. And today's not too bad. It just looks really bad. We have a lot of auctions today at 11 o'clock. And we have another auction at 11:30 and then one at 1 o'clock. And this is really important because when we get into lunch, we don't normally expect a trend. We expect that trends die at lunch, and they'll either resume trending after lunch, or we'll get a market reversal, or we go sideways into the close from there. But on a day like this, with all of these additional auctions at lunch, we actually could begin trending at that point. If we are range bound into lunch, this can galvanize us into a trend day. If we are if we're trending, this can shut that trend down, flip us over, take us the other direction. It can completely wipe out a really great day, or it can be the start of a really good day. So you don't want to be caught by these numbers. The bonds open at 8. The dollar opens at 8.20. There's really no reason to be trying to trade in that window anyways. And right behind that at 8:30 today, we've got Econ news. So 8:30, 10, 10:30, 11, 11:30, and then 1 o'clock. It's a full day. One of the things that really resonates on a day like this is that we're very likely not going to see a consistent market move through the day. Anything that starts out really good, as soon as 10 o'clock it's here, it could kill that. And if it started out really bad, it could flip it over. So it's just going to be a very inconsistent day. Be prepared for that. And then also, if these numbers line up in a way that investors really like, because right now, there's a whole big deal about the bonds and the dollar and inflation. These numbers turn heads today, we could see a blowout move in the market. Goldman Sachs is still maintaining their $500 price range on SPY, 500 to 520 by the end of the year. And we are full on in the Christmas rally. So, take it for what you got. All right, so we come over to the ES. Average daily range. Right now, the ES has an average daily range of 0.75%. Well, we're already up 0.25% this morning. That leaves 2 more quarters to go. On an average day, seeing the ES make a 1% move, that's not an unreasonable move at all. From our current location, just adding 0.5% would put us around that cog line of 47.11, and a 0.75% move would put us at around 47.22. It's not too bad. That would break through yesterday's highest point, which is an institutional pivot point that needs to be on the table. We need to be aware of that. It's very close to the cog line, the 47.11. So rather than have 2 lines and quibble about it, We'll just call that cog line the upside target, the first upside target. And then past that, we'd have to use Fibonacci values because there's nothing else to the left back there to deal with. Should we go the other direction? We will deal with yesterday's open. It's going to be a institutional pivot that will be bothering us. We get past that one. We'll deal with this Globex low, yesterday's low, and then we'll deal with Tuesday's Globex. That would put us back down to the point of control, by the way. The two profiles here that you're seeing, the one in blue is time by price, and the one in green is volume by price. And they're being measured on a 10-day chart with 30-minute candles. It is worth noting that we are at the top of the box, that we had poked our head out of the box the other day, came back inside of it. We're retesting the top of that box again. And we're actually at the top of both boxes. The other value that we use, we're on a 10-day 30, is a 20-day 1 hour. Again, blue is time and green is volume. So time by price and volume by price. You can see, even though we spent time yesterday through this 4670, 4680 area, we've still got a very shallow profile there where we can still move through there with relative ease. And yet look at how much time we spent there. We spent a considerable amount of time. We did get through this level of resistance here. If we can maintain that, there's not a lot of volume resistance over our head, right? Nothing on the profile. We do have the value area high, but that lines up with the cog line anyways. So it's just very likely to be fits and starts, choppiness, unless that economic news comes out with irrefutable numbers, something that has no doubt, confusion, and ambiguity. If they have to kick it down to the nerds and wait for a response, it's going to take a while before they make trading decisions based on that, right? And we know that there's been a massive capital rotation coming into the market. The MOC the other day was like 2-to-1 negative. Well, the firms don't go to cash, right? It costs them money to go to cash. They're penalized by going to cash. They won't do that, but they will rotate, right? They'll rotate into a different sector and a different industry. And that deals with the ES. Bring up the NASDAQ and kind of get the same perspective. You can see that volume profile from yesterday, very, very long, a lot of structure there. It's right at the point of control too. On the time profile, it's the value area high. That is a 5-day 5-minute though, and we want to get back a little ways. 10-day 30. We're outside the box. We do have a little bit of volume resistance around the 4-quarter area. Get past that, then we've got the 450, right? The quarters, NASDAQ quarters. So 425 and 450. Not a surprise, right? We would be playing the quarters anyways. A drop back down would put us back inside the volume profile. Point of control would be the first target. Yesterday's open, then dealing with the lows of yesterday and pivot point from back here. That lines up nice. That get us done in both directions. We've got an average daily range right now of more than 1%. So seeing a 1% move in the NASDAQ would not be an unreasonable assumption. That's what its average move is right now. We're already up 0.5%. We could add 1% to that with the drawing tool. I think we'll just add 0.75%. That put us at around 5/4. All right, so you're looking at going from 16.4 to 16.5. It's not bad. While we're here, we may as well check 20-day 1 hour. You can see we're still inside the box. The volume profile really kind of fades off above this structure that we've already been through. We don't have anything on time to deal with. We're good to go on both of those. Consistent, persistent trend to the upside, looking at it on the 1 hour. It's all going to be economics today. There's been a lot of divergence when we've been using the visualize tab coming into the index watch, setting this to the the Nasdaq and the S&P. Tesla is a monster, and when we're watching capital versus issues versus market moving, we've been seeing things like the Nasdaq going up, more issues going up than down, and more capital going out than in. That divergence has made it hard to play with the market breadth, right? It's been a very misleading situation. I don't expect that that's going to end anytime soon. Just wanted to point it out. Be careful with the divergence. What's moving around in the pre-market? So these are the names of the companies that are up in the pre-market at least 2%. You can see it's not a very broad list, and some of them are going to be connected to things like earnings, news. You can see AMD really made some significant gains in the overnight hours here. NVIDIA also connected to that news. So you got a couple of chip names on the table today. Retail. When I bring up a list like this, the first thing I'm trying to identify is, are there individual sectors that are standing out? Obviously, the chip sector is right in our face. That's the first thing that got my attention. But what's past that? I see a little bit of EV market in here, some IPO market. But I noticed the list isn't very large either. So we're going to back it up a little bit. What's up at least 1% this morning? And is that a larger list? That's a much larger list. Yeah, that's not too bad. Noticeably missing are financials. So another chip name I see is up in there. We got MU. So now we've got multiple chip names up in the pre-market. Retail, a lot of retail. Some Asian, China retail. Bring up the sectors, maybe get a better understanding of what we've got here. Technology, consumer discretionary, cloud, communications, airlines, metals, all of those are good. And yet the financials are almost flat. Industrials are almost flat. IGV is that ETF that we've been using for those bigger tech names. It's a really nice ETF to use for that. The China ETF is negative. EEM is negative. Now, this one really stands out because if we're in a, quote, risk on day, if we were bullish today, that would be green. Speculative money goes to EEM. And so when we see that down, we know that they're playing defense. Both of my energy ETFs are down. That really stands out. Energy and finance have been tightly correlated all year. I would be looking for a reversal play in finance and energy, especially with all those auctions on the table. If we happen to get a significant change in the dollar or the bonds, that would be the direction I'd go. And then building materials, oddly enough, to the downside. So you can see yesterday in the bonds and yesterday in the dollar, we had some pretty good moves. The VIX is still a little shunted after that contract change. It's always muted, it seems, after we get that contract. It's almost worth going in and putting in a one more contract out just to avoid that kind of thing. or there is a setting where Thinkorswim will normalize it and treat it like a continuous contract so that you don't get that gap. But either way, VIX really didn't rock and roll yesterday, even though, there was periods of time where the dollar and the bonds were causing us a little bit of consternation. We are continuing that fade to the downside in the dollar. It's not at an extreme value yet. We definitely want to keep our eye on these two products. They are one of the best indicators that you could put on your chart, watching the bonds and watching the dollar and getting a feel for what's going on in the day. A lot of times, these are the drivers that move our market, where we see, a significant shift in the bonds suddenly drop the marketplace, right? Or spike the marketplace. A lot of times when we see a move in the market and we're trying to ask the question, what just happened? What caused this? And yet, while we're looking at news and trying to see what report came out that caused a move like this, we're not looking at something like the bonds or the dollar, which is what made it happen, right? So start here. If you don't see anything in the bonds or the dollar that kind of gives you a tell for what happened, then you can try chasing down the rabbit hole and finding what news may have rocked our market. All right, we're on TradingView. We got the S&P 500. I don't want 500 names. It's too many names. Set this to pre-market change. Use the filter. Drop the names down by market weight to around 100 names. Boom. Got it. That's a little tricky to do, by the way. The color scheme is a little off, so, just click the spot here. Drop it. Now we've got a little bit of color to it. Green on the screen. Risk off in consumer services, energy and materials. Health is flat. Processes isn't looking too healthy either. Even in the technology side, health technology doesn't look good, right? So, sectors are fine and industries are good, but subsectors and sub-industries really kind of highlight what's going on, like health technology, right? Not just technology or technology services. So the S&P, it isn't looking too bad, but this is where finance is at, right? The NASDAQ 100 doesn't have finances. So when I'm looking at the S&P 100, I want a little bit of guidance from this thing. I want it to give me an idea of what's going on in the sectors. Where should I be focusing my money? And should I be trying to play the sectors today, right? If we can't use the sectors for trade ideas, we want to know that early enough in the morning that we can get our scanners set up and prepped and ready to go so that we're not trying to lean on the sectors to get a trade that doesn't come, right? Looking at the sectors this morning, it doesn't seem to be an issue, but a lot of mornings I make the statement we're going to have to be stock pickers today. That we're not going to be able to just go in and lean on the sectors to find an opportunity. I don't think that's the case yet, but I'm going to keep our eyes on it. So these are the names sorted by change percent that are up in the pre-market. Of course, NVIDIA with earnings is a blowout move. It's going to shift the money across the board. Sympathy plays as well. There are some names in here with some bank and finance connected to it, but you got to be careful when you're looking at credit cards and banks and lending institutions because a lot of times their sectors are IT, not finance. Looking at what's down this morning, a couple of those really odd movers that we've had recently, catch up and just little weird odd names that are running are not running this morning. We're kind of getting that rebalance back again. Really keep your eye on energy this morning. I think that's going to be the real game changer today. We're on NASDAQ 100, change by pre-market change percent. No filter required. It's only 100 names. We don't need to do anything with it. Just going to adjust the color scheme a little bit. Green on the screen. Got a little bit of red in individualized sectors. Kind of break it down that way. It makes a little more sense. Right, so retail's looking relatively good. electronics technology, technology services. Activision's giving us a little bit of grief on the consumer durables, but not by very much. I mean, negligibly, right? Whatever. A little bit. For the NASDAQ 100, change percent. Again, catch up down significantly. It's not much of a surprise. I was surprised at how far it had gone up in the first place. Nothing's really standing out in there, really, except for how flat we are in a lot of names. So this is really the best part, right here, where we try to quantify how bullish are we this morning or how bearish are we this morning. We got the NASDAQ pre-market change percent set to 0.5, and we're asking the question, how many names in the NASDAQ 100 are up at least 0.5%? In a good, clean, strong, bullish morning, this thing will be up 45, 55 names, right? That's where we can say 55% of the NASDAQ is up in the pre-market, more than 0.5%. That's a good, strong, bullish open. But on a day like this, is kind of flat. We're not really feeling that love. And even the names that are up are more sympathy plays than anything else. Just out of morbid curiosity, how many names are down this morning? At least 0.5%. Oh, yeah, that's nothing. Negligible, right? China name stands out. Baidu and PDD. I won't even try to murder that one. Communication names, keep your eye on that. It could get some sympathy across into the other communications names. See if that bleeds over. For the S&P 100, how many names are down 0.5%? Only 3, and they're the same ones that we already knew about. How many are up at least 0.5%? 7. So that's very, very flat. Visa, PayPal, both of those, well, at least one of those are technology, right? Not finance. Okay, so we know that the chip names are up in the pre-market. You can see all the chip names except one are up in the pre-market. For electric vehicles, we're relatively flat and or negative. For companies connected to electric vehicles, it's also a mixed bag. So nothing really popping on that on either side, right? And for the names that are up this morning in EV, Tesla, Ride, and Lee, everything else is down or flat. The airlines, however, they're up slightly, not too much. If we can get that red to green going on a couple of these names, that could give us a pretty good morning, a good start to the game. But this changeover isn't very much. Right? Kind of be watching them. We're prepped off of this support level on quite a few names. So a good time to be looking at the airlines, right? We're at support. All right, for crypto, a little, right? It seems to be a mixed bag, half and half on the names that are, and for crypto here, it's more blockchain related than crypto related, right? Just it's easier to write crypto in there to have a small name on the watch list rather than a really large name. So more blockchain related. It's a mixed bag, half and half. Not really seeing a lot of fire in there. I mean, financials are mostly positive, just not by very much. And same thing with marijuana companies, slightly, but not by very much, and also a mixed bag. So hopefully the message coming through is we're very muted this morning, and we're sitting in a sideways market, and we have a lot of economic data on the table, and it's very likely to be a choppy sideways day with individualized names making blowout moves while everything else just kind of grinds sideways. Right? That's the main takeaway. So guys, I appreciate your time. I look forward to seeing you in the chat. Let's go have a good day.